Love him or hate him, Trump changed the tax game. And if you're not playing it right, well, you're getting played. A few months ago, I was sitting at a dinner with a bunch of my friends, Ozhen, Ramiel, Gil, Simon, Oz, Rodney, and Farhad. We were talking about business, real estate, money, because let's be real, what else is more important when you're trying to build wealth? And then Ozhen drops a bomb. Bro, I barely paid any taxes last year. Everyone stops, forks in midair, silence. Farhad leans in, half joking, what, are you running some offshore account we didn't know about? Ozhen laughs, no man, I just played the game right. Cost segregation, bonus depreciation, QBI deduction. I used the tax code the way it was meant to be used. Ramiel shakes his head. Dude, I gotta learn this stuff. And that's when it hit me. Most people have no clue how taxes really work. They think the tax code is designed to help everyone equally. They think working harder equals keeping more of their money. They think just owning a home is enough to get them the tax benefits. Well, they're wrong. The tax code isn't written for employees. It's written for business owners and investors. And if you're not one of them, you're leaving thousands, if not millions, on the table. Let's talk about 2017, when Trump passed the Tax Cuts and Jobs Act, TCJA. Like him or not, this changed everything. Here's what business owners and real estate investors got. 20% QBI deduction, qualified business income deduction. If you owned a business, you could deduct 20% of your income completely tax-free. Bonus depreciation. Real estate investors could write off huge portions of their properties in the first year. Lower corporate taxes, which means businesses went from a 35% tax rate to a 21%. Expanded 1031 exchanges. Real estate investors could defer capital gains taxes indefinitely. And if you were just a W-2 employee, crickets. No 20% deduction, no special write-offs, no ability to leverage tax laws like investors could. And that's when I realized this is why the wealthy keep getting wealthier. It's not about earning more, it's about keeping more. And the tax code is literally designed to reward the people who take risks, create businesses, and invest in assets. Now, if you're not in that category, well, you're losing. After Ozhen broke down his tax savings, Ramiel looked at me and said, so what do I need to do? Just start an LLC? And I told him, that's the first step. But if you really want to win the tax game, you need to do 3 things. 1, stop thinking like an employee. Start thinking like an investor. Employees pay taxes first and spend what's left. Business owners spend first and pay taxes on what's left. Investors use tax strategies to defer taxes indefinitely. 2, buy real estate and leverage your tax deductions. Look, there's cost segregation and bonus depreciation. They're all both legal ways to wipe out your taxable income. Mortgage interest deductions reduce taxable income while you're building wealth. 1031 exchanges roll over capital gains tax-free. Number 3, stop ignoring the tax code. It was written for you, not against you. The IRS wants you to invest in real estate. That's why they offer these deductions. They want you to start a business. That's why they give you tax breaks. You just have to take advantage of it. And this is the part that hit them the hardest. You're already paying for these tax benefits. You are just not using them. Now let me take you a little bit back and tell you about Gil and Rodney. Both of them work hard. They make 6 figures and they own properties. One of them is paying way more in taxes than the other. Gil owns a home but no investments. So he pays full income tax, doesn't qualify for the QBI deduction, and he pays capital gains if he sells his house. Rodney, on the other hand, owns rental properties and runs a small business. He gets to write off mortgage interest, depreciation, and repairs, and he also uses the 20% QBI deduction to reduce his taxable income. He also uses cost segregation to lower his tax bill to nearly 0. Rodney is playing the game right. Gil is getting played. Sorry, bro. Which one are you? Now that we're in 2025, things are about to change again. Trump is expected to introduce a new tax plan. Business owners and investors will likely get more tax breaks. If you're still sitting on the sidelines, you're going to miss out. So here's my advice to you. 1, start a business. Even if it's a side hustle, get that QBI deduction. 2, buy real estate. Use the mortgage interest deduction, the bonus depreciation, and the cost segregation. Stop paying taxes, guys. Work with professionals who understand these strategies, not just the guy from H&R Block. Because here's the truth, it's not about how much you make, it's about how much you keep. When I left dinner, I could tell Ramiel, Farhad, and Simon were thinking differently. Because for years, they thought that working harder was the key to financial freedom. But now they realize it's about working smarter, not harder. The tax code is a game. You're either playing it or you're getting played. So which one are you? Drop tax strategy in the comments if you're ready to stop leaving money on the table. And if you want a full breakdown, watch my YouTube playlist now.